All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. We had market up about 19 points here this morning. Small caps trading up a little bit. As you know, market's going to close here in about 40 minutes. But we have something happening that we haven't seen happen in the challenge, so far. And this is something that's going to happen, 4 or 5 times a year based on, the past data that we have. And it is happening today. I'll be honest, I had no expectations of it. But we have quite a few entry triggers. We have Johnson & Johnson with a bullish entry. We have Under Armour with a bullish entry. We have Pepsi with a bullish entry. Sorry, let me grab my notes here since there's so many. They're not all in my head here. Twilio with a bullish entry here. And Chipotle Mexican Grill, all bullish. We haven't seen 5 here, so far this challenge. Heck, we haven't even had a week where we've had 5. And we have 5 coming here in one single day. Very interesting. Very, very interesting indeed. Let's go take a look at them, and I'll show you how we're going to, do it for the challenge. Here's J&J, has nice 3-7 crossover action on it. Stoke 39.1, well above 50. So, suggest that this last pullback, was just a buy opportunity on the next move higher. Very, very strong J&J signal here. We have Twilio, which I talked about this morning, is also, well in play with similar action. We have Pepsi, which is, has had this nice little pullback. Next move up, 3-7 crossover, solid 39.1, low consolidation risk component on it. And you'll notice a lot of these, the volumes are low today. Well, it's a half day, right? The volumes are going to be low on almost everything because of the half day. We have Chipotle Mexican Grill, which has been dancing up and down around the 3-7, but today is actually signaling a bullish entry, unlike some of the other 3-7 crossovers that we've seen over the last week. And then we have Under Armour, which we've traded before here this challenge. Nice little 3-7 crossover here on it, and is triggering bullish with that crossover. As things sit right now, and I'm going to assume they're not going to change, but here we go. Disney option is 555. Bank of America option is 188. So let's go and adjust these here. So 555, 188, like watching paint dry with those two today. But neither of them are at their time stop, and neither of them are at their exit level or their profit level. So we're not pulling off Bank of America or Disney. So holding on to both of these here today. But we only have cash enough for one new trade, and we have 5 triggers on the board. And we haven't had to resort to this yet, but we have the trigger method here. The sorting method right here, where we could take these, we can run them through the 7s to kind of sort them out. We can run them through the tied up or tied down on the 50, 100 to 200 day moving average, and we can look at these from a liquidity standpoint as the third method. But we are at an interesting time of year. We are at a time of year where we're heading into earnings season. And when you go and you look at the options on J&J, they just don't make a lot of sense. The earnings are in them. And so if we look at the price target and the stop level, and let's say we hit our price target, we're not making a whole lot. We're not really doing a heck of a whole lot. Twilio, the same. The options are just kind of insane. We look at Chipotle Mexican Grill. It's the same thing because earnings are priced in. And then Pepsi with earnings next week, same thing. We need some pretty monster moves to get these things to actually do something. Now we can hold them over the challenge should they hold up. But you take a look at something like a Pepsi here. I mean, we go out to the 30-day period and get into the money. I mean, we're talking about a $5 option here, which is fine. That's not a big deal, but the delta on it's 67 cents. So we basically need an $8 move in Pepsi to double our money. Can an $8 move happen in Pepsi? It sure can, right? I'm not going to put it past Pepsi to move $8, but is that realistic? Here with this option, I could come down to the 135. We get a little bit better delta to price option, but we're out of the money by about $1.30. So it just isn't a great situation. If we come in here to a week earlier, the spreads, they're okay. Things are okay. The open interest is low as they've just been opened here this week, but it's just not a great setup. And when we come into the options on Chipotle, when we come into the options on Twilio, we come into any of these, they're kind of like the Bank of America, American Airlines options that we did this week, or last week and this week. The earnings are priced in, so it's not a great delta relative to the price of the option. Now, that doesn't mean it's a bad trade. That doesn't mean we can't go trade it. It simply means our reward potential is gimped, but our risk factor isn't nearly as great. And we've seen that play out with Bank of America, right? We've had more money into the trade, but it's going to give us, we're sitting at about a $1,300 gain when the stock has moved substantially here, and something where if earnings weren't priced in, we'd be looking at a $2,500 to $3,000 gain there on the trade. So as I look at all the signals that are on the board, Pepsi, Chipotle, there are too many to remember, Twilio, and Johnson & Johnson, they all have that same element. The one that doesn't is Under Armour. Under Armour doesn't have earnings coming up, and earnings are not priced into the options. And so we have a little bit of a different options scenario when it comes to Under Armour. And if we go out to the 25s, they're going for about $2 here, with a delta of about 60. And so it's not a wow, this is awesome scenario or awesome option pricing. We still need about a $3 move to double our money, but it's not it's not the same as what we're seeing in the other four. So I'm going to go with Under Armour simply because of the option pricing element associated with it. If we run the other sorting methods with Chipotle and with Pepsi, with Under Armour, they're all very similar. They all have those really solid sevens when it comes to daily, monthly, weekly options, and pretty good 50, 200-day moving average types of crosses here. So those are the 5 signals. That's why I'm going to run with Under Armour. If we had the cash, I would run with another one. The option pricing isn't a reason to stay out of Johnson & Johnson or to stay out of Pepsi or to stay out of any of those. And if it were just one of those triggering, I'd be in. But with 5, I'm going to pick the one with the better option pricing and run with Under Armour here. So let's come in. Going to go to just the regular August monthly options here. And let's see. Let's do 15 contracts here on it. Let's see if 213 will fill. We'll see here. I'll just give that a second. And then we'll fill in everything for it. They're not wanting to fill me. Not too uncommon on a day like today, for, just fills not to be, super easy. So the 16th of August, 25 calls, and forget about trying to split that. Let's come in here, cancel, replace that, go to 214. And boom, we're filled at 214 with no problem on 15 contracts there on Under Armour calls. All right. All right. Stock price $25.92. So let's go fill in our spreadsheet. All right. Here we go. Trade date. Under Armour. You know, we've done Under Armour before, and wasn't too long ago that we did Under Armour. Be nice to repeat the result from Under Armour before, but let's see. 7:03 p.m. 16th of August. 16th of August. Let me verify the alert went out real quick. Sorry. 16th of August, 25 calls. It looks like the alert went out, so we're good to go. 214 is the option price on 15 contracts. Stock entry price here. Whoops. Stock entry price is $25.92. ATR here on Under Armour is 67 cents. So easy enough, 0.67. Stock exit level. Current stock price. There we go. So our auto exit date is going to be if it's red, 3 days from today. Tomorrow the market's closed, so we have Friday, Monday, and Tuesday, so 7-9 p.m. And the auto exit date for a green, if it doesn't hit its targets, is 7:11 p.m. And there we go. All right, so 214 current price, so cash in. Looks like we put a little less cash than with Disney there, but gain loss here. Whoops. Let's make sure that's populated and open. And there we go. We are in and off and rolling here. Okay. So that's the Under Armour entry. Again, 5 signals today. That's the most we've seen here. The last time we saw this many signals was on the downside before this challenge. It was between doing the testing period and when this challenge opened here in the beginning of May. And it was when we saw stocks like FedEx, trigger bearish. We saw Alcoa trigger bearish. We saw Halliburton trigger bearish. We saw all these stocks just trigger bearish, and within that short span. So that was the last time we had 5 in one day, and I'm not sure which ones were the 5 in that day, but it was a period where we had a lot of bearish signals come in, and that was the last time we saw this many all at once there. So there we go. There we go. So holding Disney here the weekend, here for the holiday, holding on to Bank of America and new entry, and running with some Under Armour. All right. Wish you all a great 4th of July. I'll be back on here with you early Friday morning. Have yourself a safe one, and we'll talk to you then. Take care.